In this video I will be covering key gold and silver news. Hello, I am Cortana. I am a trader's anon assistant who is going to cover all the up-to-date news and moves in the precious metals market. Now let's dive in. Inflation in the United States has accelerated to its fastest annual pace for more than 3 decades, driving gold and silver prices to new highs on Wednesday. A 12-month high was reached for gold in euros at €1,610, while a 12-month high was reached for gold in pounds per ounce at £1,380. It was the first time since early August when silver prices surpassed $25 for the first time since last week. The Consumer Price Index in the United States rose from 5.4% to 6.2% last month, much above the expected 5.8% growth rate. As of July 1982, this month's performance was only 0.2 percentage points lower than the previous peak. The Fed funds overnight target rate at the time was 12.6%, providing cash savers a real return of about 6%. Around Christmas of 1990, interest rates in the United States were 1% higher than inflation. U.S. Central Bank has held its benchmark interest rate around 0.10% from the beginning of U.S. COVID crisis in March 2020. Cash savers face the lowest real interest rates ever, resulting in a loss of purchasing power of approximately 6 cents annually. As a result, the CPI inflation rate minus the dollarized Fed funds rate. Since August 1991, core CPI inflation has been at its highest level since food and fuel were removed from the equation. Gold's dollar price surge was the fastest since the COVID upheaval of March 2020 across all financial markets. Factory gate inflation in China, the world's second-largest economy and the world's top goods importer and exporter, rose sharply last month, according to separate figures. Energy and raw material costs rose on a monthly basis, which had a direct influence on food and transportation as well as most service sectors. Although long-term interest rates rose today, they were still lower than they were at the start of the week when they stood at 1.50%. New lows in TIPS bond yields were seen after the release of the CPI, which indicated that 10-year Treasury paper would lose 1.24% of its value per year until 2031. Despite a recent climb to levels last seen in August, silver XAG USD has been unable to break beyond $24, with the metal down 0.26% in intraday trading. On Thursday, after the release of U.S. inflation data the day before, which caused market volatility, the purchasers of precious metals used the opportunity to take a breather during the calm Asian session. Although the lack of activity in the market may be attributed to a weak day in the U.S. bond markets, concerns over Evergrande and the state of U.S.-China trade relations are expected to keep momentum traders active in the foreseeable future, as well. U.S. President Biden expressed his intention to combat inflation as the primary inflation indicator. The Consumer Price Index (CPI) reached a 30-year high of 6.2% year-on-year in September, a 30-year high for the index. According to Reuters, the nation's government's primary aim is to keep inflation from growing further in the country. Consumer Price Index (CPI) in the United States increased on Wednesday, but inflation expectations as assessed by the 10-year break-even inflation rate also increased, reaching their highest levels since May 2006, according to data from the St. Louis Federal Reserve (Fed). The Federal Reserve Banks of Philadelphia and San Francisco, led by Patrick Timothy Harker and Mary C. Daly, respectively, attempted to defend the Fed doves in separate speeches, despite the fact that inflation worries are fueling Fed rate rise anxiety and dampening mood. Even though tapering is still in effect, Mr. Harker has emphasized the possibility of a rate rise, but, according to Reuters, Fed Chairman Daly has said that it would be premature to revise the formula for hiking interest rates. As a result of harsh words made by U.S. Trade Representative USTR Katherine Tai before of next week's virtual meeting between U.S. Vice President Joe Biden and his Chinese counterpart Xi Jinping on the Sino-American trade accord, the risk-off mindset has grown. Furthermore, according to the Daily Express, the news that China's floundering real estate business Evergrande has officially defaulted as the DMSA, Deutsche Markt Screening Agentur, German market screening agency, is up for preparations for the firm's bankruptcy filing contributes to the increase in risk appetite. The U.S. Treasury rate has been frozen at 1.57%, having surged to their greatest level in 7 weeks, while the S&P 500 futures are losing ground and the U.S. dollar index (DXY) has reached its highest level since July 2020. Because of the limited trading schedule and the fact that the United States is celebrating bank holiday this week, risk triggers will be critical in determining the direction of near-term trade in the coming weeks. Examining the technological possibilities, if the price fails to generate a daily close that is greater than the top of $24.85 reached in September 2021, it may retest the 100-day moving average, which was around $24.15. A big breach of a 6-week-old support line, which is expected to occur around $23.35 at the earliest, will keep the silver bulls on their side of the fence for the time being. In addition, the level of $25.37, which represents the 200-day moving average, lends support to the upward trending circumstances.